Happy Friday, everybody. This is Kelly Chavers with Coldwell Banker, Hartung and Noblin here in Tallahassee, Florida. Wanted to go ahead and start off my market update once again with news on interest rates. So interest rates just went up again this week to we're at 4.32%. So we were at 4.22% last week. Again, on my last video, I was telling everybody that we were at 3.89 in December. Now, we're not exactly sure at this point how that's going to affect the momentum of the market. But, that's an indication that it looks like we're in a very healthy market and everybody feels pretty comfortable that people are going to still keep buying houses because, again, these are still historically low interest rates. Again, like I had said before, we're expecting about 4.7%. At the rate that we're going, though, may even be higher than that by this time next year. For those people that are looking to purchase a home right now is how points are going to play into it. And points are basically you pay upfront to buy down your mortgage rate, so you can buy your rate down, say from 4.32 down maybe even under 4 by going ahead and paying a little bit extra to your lender. And contact your local lender to see if that would be advantageous for your particular situation, because depending on how long you're going to stay in that home, it may or may not be. So if you're only going to be in that home for, say, 5 years, then points may not be advantageous to your situation because you would actually pay less than you are going to upfront over the length of the loan. So everybody's looking for a great deal right now. Sellers are looking to sell their home for the highest price possible because of the low inventory, and buyers are looking to still try and make the best deal they can on buying their new home. So one of the things that I kind of wanted to touch on for sellers is the whole idea of testing the market, because they don't know, I could sell my house maybe for $20,000 higher or whatever, X amount more than what I really thought I can, or what the market is telling me that I can. Now, one of the problems with overpricing your home, biggest issue is there's usually an overcorrection. So if you don't get that fervor and you didn't price it right and you got a little overexcited, what will happen is that you start your home priced high to test the market, and then by the time you end up correcting that and pricing it at market value, what's going to happen is that your home could become stale, or you might not still have that buyer fervor and all those buyers coming and all those showings and everybody getting excited about your home. And what happens then is that the buyers go, I want a deal, and they'll actually end up offering less than what your new price is. So it can kind of backfire, in a lot of situations. Another thing is you could be limiting your buyer pool due to the affordability if they can purchase that home, or you may have priced your home, if it's in that price range that's close to new construction, you may have lost that buyer because they're saying, well, for the same price of your home, I can go get a shiny new one. The best strategy is usually to talk to a realtor or even get your home appraised beforehand, and then you can actually price your home correctly the first time. And once you actually start getting those offers and you get a lot of customers and you get a lot of excitement and attraction to your home, you can end up in a multiple offer situation where you're not only getting better terms, but you could also be getting above asking price, and it ends up being a much faster, easier sale for everybody. So if you need any advice, if you have any questions, feel free, send me a comment, send me a message, let me know how I can help you in selling or buying a new home. Have a great weekend. Cheers.